Dhananjay Sinha, I'm told, Head of Research, Economics and Strategist at Emkay Global Dhananjay Services is with us as well. Dhananjay, always good having you. Thanks so much for joining in. Start off with a bit of a micro and then we'll go on to the macro view as well, Dhananjay, but just minutes away from market open. Just need to know, how do you approach some of these PSU banks, the mid-sized ones, whether in PCA or otherwise, who are reporting numbers which are chalk and cheese? Asset quality is improving, but losses are widening. What would you do out here?
So the thing is that I think there is a lot of confusion as far as or uncertainty as far as the banking and BFSI sector is concerned as at a broader level. I think a good way to really consider this is that we have to really look at the structural story, and clearly in that structural story we are seeing that private sector banks are gaining market shares. They are having good amount of growth capital. There is an expansion in margin that is happening on select names, and as a general sort of short-term trend, there is an improvement in asset quality, and concerns are sort of fading out. So I think if you look at this set of companies, I think they are generally doing well. I think there is a flavor for some of the banks that are considered to be corporate banks. So there is a good amount of momentum and interest that is showing up out there. As far as the PSU banks are concerned, I think it's a mixed bag. Overall, it's a function of the growth, which has been fairly mild, and because they lack the growth capital. The other aspect is, of course, there is some improvement in the concern on asset quality. I think that is sort of a function of whatever sort of provisioning that they have done earlier, and the incremental slippage that is happening, that is somewhat lesser. So I think that is there. But apart from that, there is a sort of impact of the higher mark-to-market losses because of the yield curve steepening. And of course, in a context where there is uncertainty with respect to currency movement, I think there is the sentiment is somewhat against the PSU banking stock. So that is another aspect. And I would say that if you look at the issues that are confronting the government, the RBI, the NBFCs, etc., there does seem to be a scenario where some of the PSU banks will be indulging in directed lending or directed allocation. So if you look at all those concerns, I would say that it will still be pertinent to stay away from most of the PSU stocks.
Dhananjay, so far down the earnings season, we're almost approaching the fag end of the earnings season. What have you read into it like, and have there been more disappointments for you than positive surprises?
So I think if you look at the aggregate picture, there does seem to be a sort of a contraction in earnings. If you look at the adjusted PAT for non-bank and non-oil and gas sector, for Nifty there is a contraction, and so is the case with for Sensex. So I think with respect to expectation, clearly the surprise is negative. And if you look at the overall full year estimate, there has been a scaling down of estimates. I think the consensus is somewhere in the region of 15 to 18%. I guess there will be further scaling down. Start of the year, we started with consensus expectation growth of over 25%. So I think this is sort of a trend that is continuing for the past several years. So I think this year also it is likely to be no different. So the downgrade cycle will continue as far as earnings concerned. Secondly, I think from a positive standpoint, we saw a sort of a better earnings growth from some of the staple companies because of the soft raw material prices, especially with respect to food items. So that's reflected also in the contraction or a deflation in CPI food component. So there is a sort of decline out there. But apart from that, there is a sort of a impact of rising raw material cost for most of the sectors, and margins has actually decreased. So while top line appears to be decent, I think there is a margin pressure that is coming around quite on a widespread basis. So I think that's the broad takeaway from the results. I think some of the export-led sectors such as IT and select, auto names which have IT components and export components, and also with some components in capital goods, which are export-oriented, and some companies that are dependent on government spending, especially L&T and those kind of ABB, etc., have actually shown some positivity. But by and large, the earnings season has been less than estimate for sure.
Dhananjay, as I look at the screen, the auto stocks stand out for the losses that they are suffering. Tata Motors yet on the day of a downtake. The two-wheeler companies have been under pressure too. What is standing out for you as an index name within the auto space, either on the upside or on the downside? I mean, are you guys still negative on Tata Motors? Are you turning marginally bullish on, say, a Maruti Suzuki? What are you telling your clients to do with the two-wheeler names?
So on the two-wheelers names, I think Bajaj is one stock that can do better because of the export components that we have. As far as two-wheelers are concerned, there is a decent amount of volume growth that is still happening. I think there is a margin compression that is there, that is visible. So I think if you look at Hero Motors also seem to be doing fairly well as far as volume is concerned. As far as Maruti is concerned, with a fall in prices by almost like 30%, we think it is a good bet from a longer term standpoint. I think Tata Motors has corrected quite a bit. It has been exposed to a lot of headwinds, especially from the US. And so where the volume growth has been disappointing. I think the stock has actually come down substantially. I think somewhere around 185 or thereabout. It's a fairly deep value at this juncture. I'm not saying that it can't go down further, but from a longer term standpoint, it is looking good. Motherson also has a significant external sales component, which can also be doing well. So that's a sort of view on the auto side. iShares has actually been disappointing, and the results also yesterday was not was negative surprise. So there is a margin compression that is happening, and volume growth is also sort of slackening. So I think iShares is something that I would somewhat be cautious about.
What about the battery space, the likes of an Exide and Amar Raja? Would this space interest you?
So I think there is a good amount of OEM volume support that is there as far as the battery space is concerned. I think Exide looks somewhat better. So there is a gain in market share that they have exhibited in the recent period. So I think that is a favorable thing for Exide.
Interesting. Dhananjay, before the market open, you were talking about NBFCs. It's a bit of a litmus test the next few days with the rollovers, etc. Do you expect only the stronger names to find favor? Or if the storm passes, then some of the beaten down names could also start garnering some investor attention? What would you tell some of your top clients?
So the thing is that we have been negative on NBFC space for last 1 year, since November of 2017, and this has largely been driven by our view that there has been a significant ALM mismatch they have been running, and with a tightening in interest rate cycle, they would actually be squeezed out. I think what we are seeing is a combination of liquidity issue, margin compression, and also rising credit cost because of weak underwriting, especially for NBFCs that have been exposed to developer finance in the real estate sector. My sense is that this will continue. While RBI and the government are sort of debating on what should be the right path, and the government is definitely pressurizing them on a proper resolution. My sense is that the RBI has already given certain line of of liquidity through the banking system. I think that should continue. But I think the amount of rollovers and redemptions that are lined up is substantial, and hence my sense is that not all of this will be addressed in a short period of time, and hence I would continue to avoid NBFC space, which are in companies which are engaged in developer financing. I think where we will find value as things settle down are those NBFCs that are engaged in consumer lending, etc., such as Bajaj, which can actually be seen as a structural play over a longer period of time.
Okay. Dhananjay, one final question from my end. Oil circa 70, what does this do to calls on aviation at all? Because they've now stopped reacting to bad news. Jet Airways is not correcting on what was a howler of a quarter. Interglobal Aviation too marginally in the green. Probably the reason that I could fathom is that crude is come off slightly as well. What do you do with the aviation pack, if anything?
So we don't have a coverage out there, but my sense is that the sector was under a lot of stress because of the rise in crude prices, and you had rupee depreciation also impacting them. I think some of this has worn off with decrease in the crude oil prices. Recently, there is sort of news of increased supply, and US President Donald Trump actually indicating that the OPEC should not cut back on production, etc. So I think those are some positive news for the aviation sector from a cost standpoint. I'm not very sure this is going to sustain for a very long period of time. I don't have a very clear view on oil, but I think the rupee will undergo further depreciation, and that will sort of compound the problem. So I think the stocks in this sector may react to the decrease in the oil prices, but I think eventually I think the uncertainty remains with respect to the outlook on oil prices, and also I'm fairly sure that the rupee will actually weaken. So I think put together, I would say one would not expect a significant run up in this sector at this juncture.
Real estate seems to have fallen out of favor. I mean, there have been talks of how many of these developers could face the liquidity crunch if they don't get funding from the relevant NBFCs. What's your take here? I mean, nonetheless, there is a huge inventory pile-up. They need to monetize that in order to make sure that development doesn't come to a standstill. What's your sense here, Dhananjay, and whether or not any of them make for a good investment, probably the likes of an Oberoi Realty for that matter?
So the thing is that at this juncture, I would still be avoiding the real estate. I mean, we don't have a coverage, but I think the concern with respect to the NBFC space should definitely start reflecting on the developer's operation. So my sense is that unless the real estate players eventually start to sort of push more sales through lower prices, so the cash flow will be a concern for them. Eventually, that's what they will end up doing if the developer financing dry out. So I think that's an eventual thing. We'll have to see how this pans out. So I would still be avoiding this sector.
All right. Anything else that you would like to talk about, Dhananjay, specific to what you're liking?
So I think we have been talking about the IT space also, where there has been a sort of a correction in stocks, and we think that there has been a certain reasonable valuation that some of the stocks have actually come down to. So HCL Tech is something which has been our favorite stock. Within that, in a mid cap, we have Intellect Design. Within the banking sector, we are still having stronger conviction on ICICI Bank, which has been our top pick, and HDFC Bank. So that is on the on the banking space. I think within the pharma space, we have been liking Aurobindo as well. So I think these are some of the Aurobindo and Dr. Reddy's. So I think these are the some of the conviction ideas that we have.
Yeah, just before I thank you though, just want to mark a couple of questions and just one last question that I do have, but I want to mark what's happening to Bank of India and UCO Bank as well. So while the asset quality numbers may have looked marginally better, but I think I'm just taking on board Dhananjay's point about how the stress in the system, at least especially for the smaller names, doesn't seem to have gone out. And it's showing in the way these banks have reacted. So the first few set of mid-sized PSU banks came out with reasonable asset qualities and good numbers. The last few names, Indian Bank, UCO Bank, Bank of India, they've all been struggling and coming apart at the seams. So there's a little bit of an issue out there on those names for sure. Dhananjay, my final question, and that's related to how does one play any of the agrarian pockets, considering the long-standing commentary over the last 6 months has been the growth in the rural income, the MSP hikes, and therefore that, and if indeed the direct transfer of money has to happen, then that there is more money at the hands of the rural consumer and the farmer, and obviously where he spends is where the earnings would come in over the next 6 to 9 odd months. How are you playing that?
So I think we have been sort of overweight rural theme, especially on the consumption side for the last 1.5 years. I think what I'm realizing now, we have to really segregate this space, and we have to divide the wider rural sort of demand and the agrarian sector. I think the agrarian sector is still under distress. That's reflected in the declining realization of agriculture produce, varying from vegetables, fruits, milk, and also other cash crops. So I think pulses, for instance. So I think there is a sort of a distress as far as realization is concerned. We have already seen costs rising, and so the cost of cultivation would have increased. So I think the margin pressure has been there. With respect to cereals, while the MSP increase was very high, somewhere around 15% 12 to 15%. I think that's not really reflecting still on the cereal price inflation. So that's still about 2% or thereabouts. So I think the effectiveness of MSP increases on a wider, or whatever the government is doing at a wider agriculture level, is not really reflected in terms of the farm sector economics. Also, we are seeing that in various parts of the country there is a deficiency as far as monsoon is concerned. So I think there are issues out there. So Maharashtra, for instance, is asking for a special package for the agricultural sector. So I think the agrarian part is still under stress. I think as far as the rural is concerned, I think there is good amount of government allocation that has been happening, through Manrega or other entitlement schemes that has been actually flowing into the demand. So I think you see some of that reflecting in the auto numbers. So I think there has to be a segregation. Apart from that, the staple companies have also, HUL, etc., have also given a positive commentary as far as rural demand is concerned. The third angle that has to be really looked at is a lowering of food items as far as raw material costs is concerned, has actually reflected positively on margins of some of the staple companies such as Britannia, Nestle or Marico. So I think it's a sort of a mix of it. So we would not be so gung-ho about the agrarian stocks, especially in the agrochemicals and agro input space versus versus the agrarian versus the rural place.
Right, got that. Dhananjay, really appreciate you taking out the time and sharing your thoughts and views with us here on the show.